What's up, boys and girls? Welcome to another video with me, Alex, the dude who likes personal finance and lives on one of the most remote places on Earth, Greenland. Today, we're gonna be talking about how to get your second property if you already own the property you live in right now. We are not talking about vacation houses, we are talking about a second property which is going to make you more money. Hence a rental property. Reason why I am interested in this right now is because hopefully I will be buying a rental property pretty soon. I already got my company set up. Maybe a new video for that one. So sit back, relax, hit the like button, subscribe, and let's get started. I just set up a new angle for you so that you can see more than just my new friend up here in my forehead. To clarify, I'll be talking about acquiring properties in Denmark and Greenland, as the financial rules are fairly similar in Greenland and Denmark, as the mortgages are going through Danish mortgage companies such as Nykredit and Totalkredit. So if you don't live in Greenland or Denmark, you can choose to skip the video, or if you're a little curious, you can just hang on to it and continue watching. Thank you. How are the possibilities in example the US? Please let me know down below, as I'm also fairly curious as to how all the gurus can buy houses with seemingly no money and no assets and no credit. Let me know down below. And why do we even want mortgages? Fairly simple, because they are cheaper than, let's say, bank loans. That's why. Bank loans in Greenland range from 7 to 12%, and mortgages range from 1 to 2.5, 3%, depending on if you're a private person who buys it or you're buying it through a company. For financing your second property, you can go 3 ways. Number 1, if your current loan to income ratio allows you to buy private, go ahead and do so. Here in Greenland and Denmark, there's set out a max for private person that you can only buy or finance through a mortgage of up to 4 times your annual income. Meaning that for if you have a first house and you buy the second one, and those two combined loan value wise does not exceed 4 times your annual income, go ahead and buy private. Number 2, you can just buy it out in cash. I personally don't think that's the way to go, because then you miss out on leverage. Or number 3, setting up a business called either an APS or an AS, which is kind of equivalent to the LLCs that people in the States use. When you do it this way, you have to present it to your bank before you can get the loan, but if they're satisfied and you're satisfied, you can proceed. Generally, going the business route makes it better tax-wise. For example, you'll be taxed at a business tax rate compared to a personal income rate, and you won't be as personally liable as if you were to be a private person who just bought it. Still, you kind of do, because the bank still wants you to be personally liable when you co-sign with your business. This is just in the beginning when they don't know you and they can't see anything on your balance sheets. So every time you ask for a mortgage through the bank and with your business, then they will definitely ask you to sort of co-sign and be personally liable for the loan as well. I'm telling you, those banks are pretty greedy. Which means that if you don't have 1.5 to 2.5 million Danish lying around, or you don't make a ton of money, which with your second property purchase doesn't get you over the 4x your annual income, then you sort of have to go through a business to get financing for your second property. Personally, I have to start a business myself, and I'm currently awaiting the papers at the moment, and I've just paid a lawyer 8,000 Danish crowns just to make some papers for me. I hope they're good and have very nice headers and footers on them. Thank you. So, assuming that you already have your business papers right now, you can then proceed to save up or find financing for a down payment, which roughly equates to 10 to 40% of the house value. As you, for older buildings, can only get up to 60% of the value as a mortgage, the mortgage meaning the better loan of 1 to 2.5, 3% annually, as you then have to come up with either 40% in cash or split the down payment with another bank loan, and the bank loans being the more expensive ones. But luckily, as for newer buildings here in Greenland, you can do something called a 20-20-60 loan, which is a public loan that has made it cheaper to buy new houses here in Greenland. which is you take out a mortgage of 60% and 20% is a 20-year installment-free loan that you get through the government, and then you hand out the last 20% in cash, or with a bank loan depending on how much cash you have on hand. But generally cash is preferred, as the bank loans just make it way more expensive to service the loans. The installment-free loan you start to pay off after 20% when the installment-free period is over. It's very favorable, and I myself used it when I bought this house I'm living in right now. You can check out the link up here how I found financing and how much I paid for this house. But generally a big thumbs up for the government for offering this opportunity. And also, by going the 20-20-60 route and buying a brand new house, you actually get a brand new house for way better financing than if you bought an older one and had to service a bank loan on top of your mortgage. Meaning a rental would yield a lot more, as it is brand new, lower monthly payments and less maintenance since it is brand new. Hopefully less maintenance depending on where you buy the house. When you have found out if you want to go the old house versus the new house, you simply now just start to crunch the numbers and see which ones makes financial sense to you. When you find a deal that makes financial sense, what you simply do is that you send the papers to the bank and ask if they want to help you in this real estate deal, and hopefully they will help you in the endeavor of becoming a real estate tycoon in the future. It's gonna be fantastic. Let's say the bank want to do the financing for you, then many dollars later, many fees spent to the bank, real estate fees, deed fees, maybe some minor renovations, you might be able to get your second property, which you can rent out for a cash flow positive rental. Let me know how you did it. I'm fairly interested because I want to do the same pretty soon. So with that said, thank you so much for watching. We're almost at 100 subscribers here, so don't forget to hit the like button, subscribe, and see you in the next video. Okay, bye.